Good morning, everyone. Morning, welcome to another Wealth Coffee Chat. Good to see a few people jumping on. Morning, Sean. Morning, Alison. Natando. Nikhil. Good morning, team. Hopefully you're all awesome and well wherever you are. Having a great, terrific Tuesday. Welcome to another Wealth Coffee Chat. Like I said, I'll just do a few little intros while we warm up the old live stream. Folks, stick with me. We're going to have a bit of a chat today about the world of, the world of land. Land, what's going on with the land market in Australia? But before we do that, before we get into it, before we sink our teeth in there, anybody who's new, if you're new, and if you don't know me, there's my name down the bottom there, Jason Witten, Wealth Coffee Chats. Welcome to it. Been catching up with some cool, crazy cats just like you for over a couple of years now. And in the mornings, around about 8:10 Queensland time, 9:10 on the East Coast, we get together each morning, Monday to Friday, and have a bit of a chat, bit of a yarn about property investing, about the idea of creating wealth and building a property portfolio. This thing's a marathon, not a sprint. Buy well, never sell. There's a couple of sayings around here, and if you're new, let us know in the chat. Say hello. If you just joined mentoring, or if you're finding us accidentally, welcome along. I've been property investing over 20 years, coaching property investors over 18 across Australia and New Zealand, and along the way, learned a couple of things, done a few deals. Matter of fact, over 7,000 properties we've helped our clients buy and put into their property portfolios. So, paid some attention, learnt one or two things, and that's what we get a chance to hang out in the mornings and quickly chat about, and many other times as well. As you guys know, if you're in our mentoring program, we get to catch up regularly and do some coaching, one-on-one stuff, whatever it might be. But good to see all of you guys on. We've got Linda and Anne and Chris. Morning, team. Good to see you. What is going on out there in the marketplace right now? Hey, listen, we're going to talk about something in a minute that I think is pretty interesting when it comes to building your portfolio. And you guys know we've talked about the idea of diversification. And tell me right now in the chat if you're there, if you've got a chance to get those thumbs working, or you're sitting in front of a keyboard right now. Tell me in the chat, how do you diversify in the world of residential real estate? What's the style? There's two main ways in residential investing, residential buy and hold residential investing. How do you diversify? There's two strategies that we deploy or we teach when it comes to the property investment space. Put that in the chat for me, team, because we're going to talk about one of those strategies this morning, or one of the styles of property deals that we do, and how that helps us diversify, how that helps us get some exposure, and away we go. Nigel's fast off the keyboard. Different states, different types. Exactly, Nigel. Yep, and you're on it too, Alison. Well done. Good, fast answers there from the crew. So the idea that we can diversify across different states at different times, mostly because of price point and tax management. Queensland's trying to make a little change in that one. We're keeping an eye on the cheeky Queenslanders. And then the different styles of properties, often driven by budget as we go. So let's dive into what we're going to talk about today. And we're going to talk about the idea of the three types of properties, and put it in the chat if you want to. But what are the three types of residential real estate we can invest in? And if we do, unit apartment, we've got a townhouse, townhome, and we've got a house. Okay, three types of deals. Now you can obviously in this space, new or old, but we're not talking about that today. We're talking about house, townhouse, unit, apartment, townhouses, houses. Exactly, team. So the three types of deals and how we end up putting that lineup in our portfolio is often driven by two things that we want to make the most of, team. So if we go, all right, a unit, apartment, townhouse, new or old, what are we looking for? It's often driven by two things. Number one, our budget. Our budget / buying power. A budget / buying power, our BP. And number two, the location we are looking to own in. Now, and what does that mean? So you want to be closer to infrastructure and amenity, okay? Because the idea, it's great you could buy, let's say, a house, out in Nowheresville for, $300,000, but it's not connected to any amenity or infrastructure that you want in your investment portfolio. So when we think about this, how do we go about building our portfolio? And that's a question for maybe another time. But today I want to talk about the one over here, how when we want to choose new and house together, how do we go about, what's the combination of putting a house into your portfolio when we're looking at new purchase, new construction, new types of deals when it comes to housing? Team, put that in the chat for me. What style of investment do we choose or do we partake in when it comes to houses? All right, and that's what I want to sink my teeth into today, because this style of investment, this style of property, this style of getting a new house into your portfolio. Yep, Nintendo, it is absolutely right. A house and land type of property. Now, what's going on out there in the land of land? The house and land marketplace? Well, folks, it's a very interesting time in that market because the land supply is absolutely poleaxed. So let's have a quick look at this one. If we wanted to put a house in our portfolio, what might it look like? And where and how would we consider it? And then what drivers behind house and land actually are very interesting. There's a few more dynamics in the house and land space that we can take advantage of as property investors, that we can sometimes benefit from when it comes to growth and our portfolio. All right, so we've lined it up a bit. All right, the challenge right now is, check out this, folks. Check out the gap of, the combined median value of a house across the whole of Australia. Now, many cities obviously are well above that, well above the sort of 800,000 mark. Sydney and Melbourne and Canberra and many of those places are well over in the 1.2 million. And then you see the combined capital city units, there's probably plenty of places that are cheaper than 600,000. But you can see the gap. You can see a difference in the gap buying power. But if you can get your purchasing power up to, the house market, the house purchase, then what's going on? And we want to be able to put that type of lineup in our portfolio. I'm a big fan of having all three types, units, townhouses, and houses, because they have certainly some attractiveness when it comes to the income styles, locations, budgets, all sorts of stuff. You guys have heard me talk about this before. But there's a gap there. The challenge for many of us is we want to have a look at what's going on in that marketplace and put that type of property in our portfolio. Well, let's have a look at the pricing. Let's have a look at the supply chain out there in the world of land, house and land right now. What is going on in that market? Well, folks, it's a pretty interesting market to be taking a look at. Have a look at the different places. Have a look at the supply chain right now in the market of number of months of available residential stock. Now, this is land, pieces of land to sell. So you could buy one today and start building on it. It's in absolute all sorts when it comes to the marketplace and the amount of registered pieces of land or available stock pieces of land to buy and start to build on. Now, number one, Southeast Queensland right now, which includes Gold Coast, Brisbane, Sunny Coast, out to, Ipswich and so on. That section, folks, is absolutely at all-time lows when it comes to the supply of land up in Brizzy. Now, if you've got yourself a piece of that land, that marketplace is accelerating along very nicely. Those who've got themselves into the house and land market in previous years are very, very well rewarded. And those who are getting properties right now are still receiving momentum in that marketplace. What's the challenge right now in the marketplace? We'll talk about that in a minute. But, getting yourself a piece of land in these markets is smart. You've got momentum at your back. And for you as a property investor, that is going to reward you quite nicely into the future. All right. So have a look at Sydney, the greater Sydney. It's in all sorts as well. Sydney's in all sorts, in houses, townhouses, apartments, all over the place. It's absolutely poleaxe. And greater Melbourne. These are the three marketplaces on the East Coast. ACT, the average price there is very much out of our buying power. So let's have a quick look at what that looks like. Let's have a do. Let's say what's the average price of a piece of land in Southeast Queensland in comparison to these Southeast Queensland, Sydney, and Melbourne. All right, let's have a look at what that looks like. So if you look at this team, now Southeast Queensland, which has got the lowest supply, is the most affordable on average at the moment when it comes to the pieces of land. Now, it's an interesting one. Where will that go, team? It's very affordable. If you look at Greater Melbourne, which I think Melbourne's absolutely good value as well. But if you look at Sydney, it's undersupplied a lot, but its prices are quite high. So I'm trying to sort of weave this story here, folks. You have a look at Adelaide and Perth, which are quite cheap land. There's a lot of supply. So this is a buyer's market up here, buyer's market per se. And this is, a growth market. These are growth markets if there is some availability of credit and people can afford to pay more. So for me, when you're looking at this, when I'm looking at this, when we're going, all right, what is out there? What's looking interesting to invest in? Well, these ones here for sure. These are that doesn't work actually, does it? Try this. These two are the ones to have a look at when it comes to the land market. Melbourne and Southeast Queensland. Right now, those two locations are performing really, really nicely. So the idea that we want to potentially own a piece of land in the right market, for me, I wouldn't be going to sort of Greater Perth or Greater Adelaide right now unless your budget and you can't afford a better location. Melbourne or Southeast Queensland certainly would be my choices in that sort of space, folks. So, what does that mean when it comes to, having a look at a few other bits and pieces in this market? Let's have a look at the house sizes across. Where is it here? We'll have a look at, I think it's that one there. A few things in this thing though, which is pretty interesting. Over time, let's look at this one here. Have a look at over time what's happened to the size of the land. You start out at like 600, and now average piece of land down, 450 across the whole of Australia, 600. So what's happening also is the prices are going up, but the land size is going down. That is a driver. That's a driver. If we do this, put that number two driver, number one driver, which is the supply. Number one, low supply. Number two, your prices are going up, but the land content is going down, which means if you bought something a while ago, it's more valuable now. The idea that house sizes haven't really changed too much over, a long period, around about that sort of 235 to 245, 250 square meters. So we're talking about the land. The land is the thing that right now is getting smaller in different places and increasing in value in different places when it comes to the marketplace, folks. So for me, if we're thinking about land right now, what is the advantage? What's the opportunity? You're looking at Southeast Queensland and Melbourne being still very affordable when it comes to those two primary marketplaces as you go. So, yep. The interesting thing, though, if you have a look at this, I pulled up a few charts this morning. It's a little bit higgledy-piggledy, but hopefully you're following along. This is the construction indices that gets tracked every year. And if you look at, if we look at Victoria here and we look at QLD here, what's happening now, if you have a look at these ones, this in 2022, it's the construction increases aren't as rapid in 2022 as they are in Queensland. In Melbourne, the construction increases aren't as wild, aren't as big as in comparison to Queensland. So for me, for you, if we're looking at a piece of land right now, the front runners are Melbourne and Brisbane. And we're going to be able to get those prices, those sort of house prices, anywhere from sort of $650 to $850 in those two marketplaces. I don't think that will stay that way for very long. Over the next 5-8 years, I think certainly Brisbane will be priced out, certainly for the location team. And Melbourne right now, I think, is super value. Super value because it's been restricted a little bit as we're going along. Anyway, hopefully that made sense. I was just wanted to, tune into the concept of land has multiple triggers or multiple drivers when it comes to its value. Number one, the supply chain is absolutely polacked. Number two, the average size of that piece of land is going down. And number three, the time frame and the cost to construct on a piece of land in different locations is something that drives pricing and also ultimately value as well. So hopefully that made sense on this terrific Tuesday. There you go. Wealth Coffee Chat done and dusted, team. I'm off to Sydney for a few days. I'll probably be in and out for the Wealth Coffee Chats, but I'll pop in the mornings just quickly to have a quick yarn with you guys, as always. But I think that's it. Wealth Coffee Chat done and dusted. Hopefully you guys stay safe. Yeah, buy now, pay later. Exactly, Andrew. Stay safe out there in the marketplace. Don't do anything too silly, but don't sit around doing nothing, because at the end of the day, momentum, getting your money working for you is part of the process. All right, team, that's it. I'm just rabbiting on now. You guys be good, be awesome, be well. Wealth Coffee Chat done and dusted. Take care. Bye for now.